While I understand fully why they were so worried about the fiscal position, where they've left themselves is that they are very heavily reliant on monetary policy, which is turning out not to be as effective as they hoped. The economy is much weaker than they expected, there's no doubt about it, and they have been unable to do anything about that works. So here we are, stuck way below the pre-crisis peak, more than 3% below the pre-crisis peak, and the economy's dead in the water.
I think the broad structures of the current policy are broadly right, that we have to consolidate our fiscal position, make our public finances better. We need very active monetary policy to try and get the economy moving, and supply-side reforms to try and get round this big productivity problem we've got in the UK. So the broad parameters are right. I think they're a bit timid. The government should be doing more to get monetary policy to get the economy moving faster. That's where there's some mistakes being made.
There's been a big debate about whether the weakness of the economy since the emergency budget was due to the fiscal policy or due to other events. And I'm not insisting that it was the fiscal tightening that caused the slowdown. I think it's perfectly possible that the OBR is right, and Chris is convinced that the OBR is right. This is not, I think, a core disagreement. The core disagreement is, my view is, so what? The reality was we didn't know what the future performance of the British economy would be in June 2010. My view was that we should use all the instruments available to us, including fiscal policy, until recovery had been established. Now, the fact that then what went wrong was negative shocks, well, that makes it even more urgent, in my view, that we use those policy instruments.
I think Martin's wrong because he almost has a knee-jerk reaction to whatever's going wrong in the economy. Whatever's going wrong, he says fiscal stimulus is the answer. And fiscal stimulus isn't always the answer because you need to know what the problem is. And it's really not the case that austerity has caused the current stagnation and slow growth in the UK economy. It's been, first of all, it was high inflation, and more recently it's been very poor export performance, neither of which were caused by austerity. Now, it doesn't mean that fiscal policy is never the answer. If you have a complete disaster like you had in 2008, 2009, then fiscal policy is exactly the right time. When you've got a calamity, you want fiscal policy to take its role. But we just haven't got that. We've got a weak economy, it's slow, it's stagnant, there are lots of things wrong, there's a lot of rebalancing going on, there's a lot of problems in the supply side of the economy. And for those things, fiscal policy, I don't think, just is the answer. So just to go, there, that's what we need to do, I think misses the point.
We have much more freedom than they thought, and I think I would like him to use that, possibly in combination with the Bank of England, in an absolute determination not just to accept 1% growth this year or 1.5% growth this year, which I think may well happen now, but that we get to 2 or 3%, which is what one would normally expect in a recovery. I think he should be willing to cut taxes, reverse the VAT increase at least, that will be an obvious thing to do, or cut national insurance contributions, something to get spending power into the economy. I think he really has to pursue much more aggressively, and I think this will happen, the funding for lending and the restructuring of British banks. And though it is now very late, I would have liked to have seen this 3 or 4 years ago, we should use the freedom we have in exceptionally low interest rates to borrow more to invest. This is an unparalleled opportunity to improve the very creaky infrastructure of the UK, and I think he has the freedom to do this as long as it's within the envelope of indicating he is going to bring current spending back down to a level that is affordable in the long run.
I'd like George Osborne to be really pretty aggressive in saying what we need to have is a lot of more spending in the economy, and we need monetary policy, first of all, to try and get that to happen. It might be the case that monetary policy can't ultimately do it, and then we need to think more radical ideas. But that's the first place, so he should give the Bank of England a target to get nominal GDP, nominal income in the economy rising by about 5% a year, and then we can say that the supply side measures should ensure that it's real growth and not inflation.